Hi, everyone. How are you? Good afternoon. Good to see you all. We are going to start momentarily, just letting some people join us. So I want to say hi and welcome. Hope you're all having a really nice week. I'm Sarah. I'll introduce myself again, but always good to see you all. And so glad so many of you could join us at such short notice. Going to give us just one more minute and then we will start. Really happy you're all with us today from wherever you are. All right, how about we dig in? Okay. Hi, everyone. Thank you so much for coming to our webinar today, which we scheduled very quickly this week to help you all make sense of the meme stock craze currently underway. I'm Sarah Spagnolo. If you've been at webinars for Stash before, hopefully you know me. I'm the managing editor here at Stash. Thank you so much again for coming. I joined Stash in May of 21, just a few months after the last meme stock craze, when GameStop's stock price, alongside AMC, famously surged and then deeply dipped after most Redditors and Wall Street Bets forums actively rallied to revive the value of a slumping company. I remember walking past an actual GameStop on 6th Avenue near where I worked at the time, seeing no one in the stores, no one buying anything, just a seriously dilapidated storefront, and wondering to myself, what in the world is going on? Who thinks this chain of outdated stores is actually going to surge in value when everything on the shelves is accessible on the internet and our devices, on our phones immediately? What am I missing here? If only I had access to Doug Feldman, Stash's chief investment officer at that time. Doug is Stash's chief investment officer. He oversees our investment strategy and recommendations and leads the team that provides key market commentary, education, and financial advice. He's been in this world for decades. He's helped advise millionaires and fancy people with lots of money. He knows his stuff. Now I actually have his phone number, and I just call him when I have a question. And lucky enough for every stasher, basically you get access to him too, as he's the one who picks the investments in our managed account. He oversees our content and helps us create value for subscribers every day. Throughout his three-decade-year career, he has extensive experience making direct investments in both the private and public markets. His experience is deep and vast and super impressive. He's worked for some of the best firms out there, went to Wharton and Harvard. He's the real deal, and I'm pleased to call him a friend and trusted colleague too. Doug, thank you so much for being here with all of us today. I'm going to hit you up with some questions, but before I do, I want to tell everyone here that the questions and the chat is disabled because we only have 15 minutes. So hopefully we'll be able to get through all the content, and we'll have many more webinars in the future where we can attack other topics, but we're going to take it away from here. So Doug, tell us what's been going on for the past 3 days or so.
Absolutely, Sarah. Well, first off, thank you for the ultra warm welcome and welcome everyone attending this. It's a very interesting topic, so hopefully, we're here to help out a little bit. So for those of you, I unclear how much everyone here knows, but there on Sunday night, Roaring Kitty. Now, Roaring Kitty is the internet influencer who started off the meme craze back in 2021. He posted a picture of a gamer, a drawn picture of a gamer looking forward in a chair like this. And it was the first time he tweeted since 2021. And many took this as sort of a signal to buy. And wow, the last couple of days have been a wild ride. Millions upon millions of shares of some of these meme stocks, such as GameStop and AMC and some others, had trading volumes that were like 30 times as great as they've been over the last year. Now to put this in perspective, and I'm going to focus a lot here on GameStop, but GameStop a couple of weeks ago was trading at a roughly $12 a share. And then last week, it had this jump up. It lagged up to about $16, $18 a share all of last week. And this might have been, I don't know Roaring Kitty. I don't know what motivated him. This might have been what motivated him to post something. And that set the world on fire. So Monday, the price started to spike, and Monday and Tuesday and yesterday, GameStop hit a high of $65 a share. Today it was down a little bit, trading at $40 a share, close of about $40 a share, but been volatile. And the stock markets had to pause trading in these stocks over the last couple of days. And they do that when stocks are really volatile. It's not something they do all the time, but if something's moving so crazy, the stock markets will halt it to try to give some, sense of rationality to the market. It's really, really important for everyone in this call to know this is not typical. It is not typical for stocks to be up 100% down, up, down, moving around like this. It's extremely rare, for the vast majority of stocks, and the volatility is not something that people should be focused on. Here's the thing: GameStop as a business, from a fundamental point of view, it appears to be struggling. It's reported its first monthly profit, I think, this year in January since 2018, but they've been through rounds of layoffs, and quarterly revenue is down. It's not necessarily a great business. And so here's what I guess here's where I'd love everyone to remember as you're sitting here, is that, I've lived and worked on the world of finance for a long time. And typically, and how it's supposed to work, is that markets should work on fundamentals. But in some certain circumstances, stocks move in a way that's detached from reality. And here I know there are a lot of forces at play today. There's a passionate communities of people online, and other individuals that have a lot of influences. And so sometimes markets and stocks can move in strange ways. And this is an example of that. Now, I do not have a crystal ball. I wish I had a crystal ball, and I keep on telling Sarah to get me one for my birthday, but she won't. I wish I had a crystal ball. No one does. And if anyone ever tells you they know something with certainty or that they have a crystal ball, run from them. But I can tell you what I know to be true in my heart from my own personal experience and from years of data and analysis, is that betting on meme stocks is probably not the best way to see your money grow over the long term. And what it really is, it's a way that you can lose a lot of money very quickly.
Thank you, Doug. Salient advice. We're already 8 minutes into our webinar, so here's my reminder to you.
I gotta be faster.
We have like 6 or 7 questions. All right. Okay. How is what's happening this week different from what happened in 2021, or is it different?
It is. And so, if we go back to 2021, everyone in this call is going to remember we were in a pandemic, the height of the pandemic. It was a new world. People were at home. They were upset with the world, upset with the system. And the meme stock movement started because many people felt that they were suffering much more than what they perceived to be these billionaire hedge fund managers that were sitting in their beautiful homes, making money, shorting GameStop, while everyday Americans were just trying to survive what was a really strange environment and a really difficult time. And there were people in active investing forums, mostly Wall Street Bets on Reddit, and they were talking about this inequitability, and these online communities got together, and everyday people who may not have ever invested before began to join new investing platforms, and as a unit, they put pressure on these stocks. And I guess to say it a little bit differently, right? Collectively, they did a counterattack against Wall Street. And guess what? For a little bit of time, they won. They actually moved the market. It was great. But here's the thing, and this is what I want to be very, very clear on. This only worked for a short period of time and for a small group of people. But the majority, many, many, many people lost a lot of money. And in fact, I actually, recommend these. So anyone who hasn't seen it, you go to Netflix. Dumb Money is a movie that came out. There've also been books read. It's a cute movie, but it tells the story, and it really shows the different angles and the players involved in it.
I think I'm going to cut you off. We're going to go to the next question.
Okay, no problem.
So here's the main crux of it, which I think most people are here to get the answer to, is like, are meme stocks good investments?
No. Personally, I would not recommend them to a friend. Listen, I understand why buying a meme stock can be exciting. They're volatile, they move around, and all of that. But I liken it to as a kid, you may have played the game Hot Potato. Maybe, I don't know, but a stock's value can soar sort of as everyone rushes to buy it. But if you're left holding it when the hype dies down, you could end up with significant losses. And that's case in point with what happened back in January 2021 when the initial meme stock craze started. And so maybe, I know we're somewhat short on time, but Sarah, maybe there was an article that we wrote yesterday that had some graphs in and showed on it. Maybe you could email that out to everyone that's attending here. But I do want to say one thing is that, like, investing in these meme stocks right now, it's a bit like gambling. And if you want to gamble, I get it. Listen, truthfully, I gamble on sports. I enjoy it, but I do it with a limited amount of thing. But just want everyone here to have all the information they have, and just remember that all investing involves risk, but some investments really do involve a lot more risk. And buying these meme stocks here now, this really is gambling at this point.
All right, so final question. What do you tell your friends and people you know about what they should do in this moment?
Great question. So if, I'm not personally a big fan of losing money. I don't like taking unwarranted risks. And when stocks spike for no reason that I can understand, I tell everyone, do not get involved. You have to avoid the temptation and stay on a path to make your money work for you long term. And there's ways to do that. And so I've always preached, I know I sound like a broken record. And if anyone's been on these webinars before and heard me talk, I only say the same thing, which is the best way to build wealth over the long term is to invest in a diversified portfolio. I do have one little anecdote, if we have another minute, I'd love to share, because I know that it is hard to resist the urge to invest in these stocks, and it feels like this fear of missing out. And if you bear with me, I'll give a little anecdote of my father. My father loves to play golf. He's in his 80s and he plays with all of his golfing buddies. And his golfing buddies say to him, "Hey, I own NVIDIA, or I own this." And he calls me up and he says, "Doug, all my friends own NVIDIA. Why don't I own NVIDIA?" And I said, "But Dad, you do." And I'm going to tell everyone here how to be a safe meme stock investor. The best way to do this: buy a broad market ETF. There are ETFs out there that own thousands of stocks, including a little sliver of GameStop in it. So if you owned an ETF like that, you could tell all your friends, "Hey, I participated in this meme stock craze. I owned a little bit." Just like I tell my dad, "Hey, Dad, tell all your buddies, you owned a lot of NVIDIA. You owned it." Sure, you own all of these things because that's part of what investing is and how diversified investing is.
Do you want to tell them how to find it in the Stash app, Doug?
Well, sure. I think, I would say, first off, for everyone that's listening, I'm going to give a plug to our managed accounts. So there is smart portfolios, which are diversified portfolios. You based on your risk profile. We are selecting the ETFs that go in there. Within it, you get exposure to thousands of stocks from all different sectors and industries, sizes, geographies, from the US to international. Plus, you get diversification through exposure to fixed income or bonds, which are great. You could also find some broad market ETFs within the app by searching all investments. And I think we have a little section in there on ETFs where you can find them as well.
Great. All right. Well, with that, I'm going to close us out. I want to say thank you to Doug. I hope you all found value in that quick little mini session today. Of course, we're bringing you webinars all the time, so there will be many, many more to come. We have one actually scheduled for the next one, I believe is June 6th. So stick around. We'll send you some emails and really do appreciate you coming today. Have a wonderful day, and we'll talk to you soon. Thanks, Doug.
Thank you, everyone, for attending, and thank you so much, Sarah.